Good afternoon, everyone. Thank you for joining us again to discuss the CARES Act and the SBA Paycheck Protection Program. Here, as many of you know, we finally have an application and we finally have some additional guidelines that we'll be discussing today. So first of all, John Paul and I presenting today, we are not the SBA. We are not licensed or any way franchised or related to the SBA. What we are giving you is our interpretation of the requirements and of the loan documentation necessary based upon our interpretation of the law, the updated guidance, our reading of the application, as well as our personal interactions with SBA lenders. My name is Stuart McCallum. I have John Paul joining me. We are both partners with HHM in the Advisory Services group. So today, what we'll talk about is the updated guidance and the application. It is important to note that the guidance that has been released with the application, we understand has come directly from both the SBA and the Treasury Department. So it is our understanding that these are authoritative documents that supersede any original documentation or requirements that were listed in the original law that we discussed on Friday.
There could be some items that we discussed in our previous webinar related to this loan program that we won't cover today. Our focus mainly being on the updated guidance we've received, so we can circle back in our FAQs on any questions to the previous one later.
Something important that has come out for now that we have the application, we know that if you're a small business or sole proprietorship, they will begin processing loan applications on April 3rd, 2020. If you're an independent contractor, which I know many of you are, or self-employed individuals, unfortunately, there's going to be a delay. You will not be eligible to start applying or to have your application processed until April 10th. It is our understanding that the SBA realized that by offering $349 billion, that there would be a lot of interest in this. And so they'd like to focus on the entities that would have the largest impact from a payroll perspective.
The difference, there's been some discussion as to what is a sole proprietor and self-employed. So in our internal discussions and also discussions with various participating banks, a sole proprietor, even though technically self-employed, a sole proprietor generally is not a corporate or a legal entity, although they could be a single member LLC, which for federal tax purposes is a disregarded entity. However, the distinction here is that they would have other employees. So these employees would have payroll costs such as compensation, wages, healthcare premiums paid on their behalf. Self-employed, the difference here is the only employees themselves. So it could also be a single member LLC. However, the distinction between sole proprietor and self-employed, our understanding is that there are no employees under the self-employed bracket.
So this is an important distinction to note, as one is able to apply this Friday, which is sole proprietor, and self-employed will need to wait until next week on the 10th. So some updated guidance. The original law that we discussed on Friday was that if you requested deferment from your loan or your financial institution related to the Payment Protection Program, you could defer it up to 12 months. But you could ask and they would grant you somewhere between 6 and 12 months. This updated guidance is payments will be deferred for 6 months. The initial loan package was that you would have any amount that was left over after the forgiveness was a 10-year loan capped at 4% interest. We now have updated guidance that, let's just say you get a $2 million loan, $1 million of it is forgiven. the remaining portion of that loan, that $1 million remaining balance, you'd have an amortization period of 2 years and 0.5% of interest on it. So this is a slight difference.
From a perspective of what we're seeing from these SBA guidelines, it appears that, and you'll see this throughout our presentation, that the impetus being from the SBA is support of employment and payroll. So the language of the act really allowed for banks or participating banks to have a loan up to 10 years or an interest rate of up to 4. I think moving it to a 2-year loan and then having such a low rate of interest, and then also requiring that, or outlining, as you see, that it's a payroll program where it is expected that 75% or more is to be spent on payroll costs themselves. You're seeing the SBA really tighten and specify where these loan dollars are to be used.
This goes back to the, I guess, surprise that the SBA had in the amount of subscriptions. And we saw here a guidance that said that due to likely high subscription, which seems to imply that they would not realize so many people would be interested in what could be free money for many organizations. So the re-emphasis here is that this is a payroll-centric program with the requirement that if you want to be forgiven, then 75% of your loan now must be spent on payroll. So here's 2 examples. One here on the left, you're seeing you're spending 83% on your payroll. On the right, you're spending more on rent and utilities. The one on the right, it will not earn you the forgiveness that you are expecting from this program. At least 75% of your spending of this loan program must be on payroll.
And let's talk about real quick as to when the timing of that spend. So the spending is to occur during what's called the covered period, which is 8 weeks after the loan is made. So when you're looking at the eligible costs, which are these covered costs, rent, utilities, interest on mortgage debt, and payroll, it's really the intent here is that these dollars are to be put back and spent within 8 weeks of receiving that loan.
So just to recap, what is eligible for use of this loan: payroll, rent, utilities, and mortgage interest. There's an important distinction here on this slide. For those of you that attended the webinar on Friday, there was an extra line, an extra bullet point on this slide less than 5 days ago that said interest on other debt. It is not included in the summary that we now have. We believe that that was intentional. The SBA lenders that we've spoken with believe it to be intentional due to, again, the strong interest in this program that they would hope is focused on payroll protection, not necessarily expense relief for small businesses. So it is important to note here that if you have, let's say, a revolving line of credit that was in place as of February 15th, 2020, it is now our understanding that the interest associated with that debt is no longer an allowable expense under this new guidance.
So when looking at computing the payroll, what we're getting at is the amount that is payroll for the purposes of the loan application to compute your loan amount. The language in the act considered a rolling 12 months prior to when the loan is made. But the SBA guidance clarifies that for simplicity purposes, and thankfully so, that you can use the monthly average cost for 2019. So under that payroll cost bucket of expenses related to payroll, you would include the same items that we've talked about before, being wages, salaries, commissions, your group healthcare benefits, and that does include premiums, sick, parental, vacation, medical leave, retirement benefits, and then here local state taxes on compensation. Now, to be specific, the payroll tax on the employer side at the federal level is not included in payroll costs. It is only the local and state taxes on that compensation. And also I'll detail that these additional items are only the employer paid portion. So if you have an employee that participates or contributes a certain amount to their insurance premium, it is only the difference that's paid by the employer. That's an allowed payroll cost. We've looked at and had significant internal debate and discussion around LLC members, which do not appear on the face of the guidance or the act itself, the language of the act, to be included in as specific eligible borrowers or participants. However, since an LLC member receives income that is subject to self-employment tax, and based on our discussion with various participating banks, we are of the opinion that if you're filling out your initial application, you should include your LLC members that are allocated earnings that are active, and that are those earnings that are allocated to them are subject to self-employment tax. We would also include guaranteed payments. A guaranteed payment is an allocation of income, of earnings. And so since those are generally subject to self-employment tax as well, we would recommend that you include them when you're applying for your PPP loan.
I would like to mention that today's presentation is being recorded and would be available shortly after this presentation. We'll send out a link for it, so if you have any questions or you are looking for us to go back and recover something, we will make sure that the presentation is available for you after this.
I want to add one thing on this slide specifically. While the initial application could include these items and these income, and of course this income would also be subject to the $100,000 cap. So if your allocation of earnings and your guaranteed payments on a combined basis to each member is in excess of $100,000, the cap applies. Now, some of these guidelines could be at the bank level. Certain banks could recommend that you do not include those items as payroll. Some banks may recommend that you do. Our recommendation, in addition to including these at the front end, is that you have that conversation with your bank, your participating SBA bank, on the front end and as you're applying.
Updated guidance here. Criminal charges appear to be a big thing that the federal government doesn't like. So if you are currently in the situation of being indicted, under arraignment, otherwise charged, on probation, on parole, or incarcerated and unable probably to fill out this application, you are ineligible for this loan program. This is something that was not quite detailed in the law. This may be an SBA specific requirement that was not detailed in the law. There are some now insights that we have for the underwriting requirements. So this is not for you to do. This would be the requirements that your financial institution is required to look at. And that is to verify that your business was in operation as of February 15th, 2020, which we discussed on Friday. The dollar amount of average monthly payroll costs and the employee count. We spoke with the financial institution earlier today that's an SBA lender, and this will be a manual process for them. So to the extent that you can provide clean and clear documentation that shows employee count for 2019 to make sure that you qualify as a small business. As you remember, small business is an entity that has 500 or less employees. Here, to the extent that you can have clear documentation, your financial lender will thank you.
The SBA guidelines specify that a borrower will need to provide tax documents. They don't outline exactly which tax documents those are to include. Based on our conversations with various banks that are participating and in this loan program, we've outlined what we believe to be likely documents that will be needed. However, let me stress that it does depend and will depend on the bank that is processing this application on your behalf as to what they will require. So we've provided this list of 2019 tax return, your 2018 tax return if you have not yet filed your 2019 tax return. For a independent contractor or a self-employed individual, we believe that could be limited to simply your Schedule C on your return for the applicable activity. Your 2019 payroll tax filings could be a combination of federal and state. Employment verification documents, and that could be to verify where the employee is located for the exclusion of foreign-based employees. Your W-2, I will note here that, and we'll get to this in a bit, that the W-2, while it could be a required tax document, may not be what you want to use when computing your total wages. Your employee pay stubs, we recommend starting there for your payroll cost computation. You could need support for your other payroll cost items, such as insurance premiums paid, retirement benefits paid, and then Form 1099. There's been some conversation and discussion as to whether a borrower is to include 1099s to independent contractors as part of your average monthly payroll. Our opinion at this time, without additional guidance and based on our conversation and internal discussions, is that a borrower's Form 1099s to independent contractors are not included right now in your average monthly payroll cost. Separately, the independent contractor would report those 1099s and that income from the 1099s and support the income with the Form 1099 as their application of payroll costs.
I know there's been some discussion amongst our clients about where they can get all this payroll information, right? I spoke this morning with a representative with ADP. Many of you may use them for your payroll. It is my understanding that if you log into your ADP portal online, starting today, you will now see a pop-up window when you log in that asks you if you are seeking reporting specific to your SBA PPP filing. By clicking on that, it will take you to the archive of reports that would be necessary to file some of these.
And I'll add that a lot of our clients use various different providers for their payroll sources, and we recommend reaching out to them for that information. ADP seems to have a link right now, and I'm sure that your payroll provider would also willingly help and work with you.
So now let's dive into the application a little bit. So this is the top of the application, although they just released a new application with a different expiration date on it, but the application is substantially
ending September 30th.
So after the duration of this program, we don't know if that's an indication that there may be a second version of this. At this point, what we know is the program that we have in front of us. So this is the top of it. You'll see here that, one second, you'll see here that you have a couple of options to select from for entity type. You'll notice that these are really exceptions from your typical corporate structure, right? So if you have an S corporation that you are applying for, none of these would apply for you. You do not need to fill those out. You will notice on the right-hand side, business tax identification number, also employer identification number. I know some of you have rather complex structures to your organizations, so there is some flexibility there on the documentation that you use for the identification of your entity. For the average monthly payroll, as we talked already, what is included in payroll costs, and as we discussed on Friday, you have 2.5 times your average monthly payroll. But there's something that is interesting on this slide: number of jobs.
There's been a lot of debate as to, is that a full-time equivalent number of jobs? Will this be used in the forgiveness period to compare as a comparison point? Our understanding of this box is simply a head count at the time of the application. Now, you could have a variance between when you applied and also the actual payroll data that is included to the left. The payroll data, if it's based on 2019, could have a different head count than the head count at the date of application. Our recommendation is to be consistent. So if you're using 2019 payroll data, we recommend including the number of jobs with a head count as of the date of that data, so ending 2019. Also, our recommendation is talk to your bank. If they have a different opinion on this and they want a different number, make sure you, one, understand it, but also two, are consistent with their guidelines, because it will be going through their underwriting process.
So as John Paul indicated, it is our understanding this is not full-time equivalents. So this is number of jobs, both full-time and part-time. So moving on, we're looking at the purpose of the loan. You'll notice here it says purpose of loan. You can select more than one here. So to the extent that you're going to use it for payroll, rent, mortgage interest, and utilities, you can check them all. We've had some questions about the other box there. When we thought other debt interest was going to be included, we thought maybe that was the purpose of the box. At this time, I don't really know what other allowable expenses you could put on this that have not already been laid out there.
If the SBA has released guidance, which they have, specifying exactly what you're allowed to spend these loan funds on, it would be very interesting, and you should have a very good explanation as to why you would check the other box. So that would be something to really take some time and maybe not check, as you would not be able to spend those eligible funds on. As far as applicants, you should have an application for each owner with a greater than 20% ownership stake. So when you're filling out this application, you should list all the owners with a greater than 20% ownership stake. However, you could have duplicate applications simply to list all your owners, as each owner will need to fill one of these out.
The questions down below are interesting in the way that they are worded, because it says, is the business or any owner presently suspended, debarred, proposed for debarment, declared ineligible? It does not say, are any of the applicants above or on an addendum subject to that. It asks any owner. This is something that I would ask your financial institution, your lender, for clarity on that. I wouldn't want to mislead. I also would want to make sure that when you submit this application, that it is consistent with what your lender is expecting, because there are, as we've indicated many times during this presentation, there will be significant interest in this program. And so to the extent that you submit an application, there's a holdup, and you lose a few days or lose a few weeks while this gets sorted out, you may be negatively impacted financially in terms of the funds still available in the program. So to the extent that you have questions about these, again, question number 2, has the business any of its owners? Just confirm with your financial institution that your understanding and theirs are consistent, so that the application meets their requirements for underwriting.
There's been significant discussion around the affiliates disclosure. There should be included in your application an addendum A, which includes an overview of all other businesses that are commonly owned or have common management. And that generally is with a 50%. 50%, if you have common ownership of over 50% in each entity, they're considered an affiliate. Or if you have common management across this different entities. And the impetus here, the concern is there an organization which is a group of separate entities, each filing under its own EIN payroll data, that when considered together as a whole has greater than 500 employees? And remember, these loans are meant for entities that have less than 500 employees. So the affiliate rule, if you have a control group or if you have common ownership, these will be considered one entity for the number of employees. And the number of employees is not full-time equivalent, it's just number of employees. There are certain exceptions which we noted in our previous webinar as to what waives the affiliate rules, those being the NAICS code beginning with 72, the accommodation industry, food industry, and then also if you're a franchise that is on the franchise list with the SBA. But let me specify though that if you do have various entities and considered together, they should be grouped under this affiliate rule. And for whatever reason, you may be a franchise that is not on the approved list. This is only of concern if considered together, the number of employees you have is greater than 500. If together it's less than 500, it's okay. It's just a disclosure. So your addendum A should list at a minimum, and again, this is our expectation as to what this will include. Your bank could have an addendum A that has specific information that they want, but we expect it to include the name of the entity, the EIN, the NAICS code, the ownership interest of the applicant, and the number of employees.
We have talked, and I've answered a lot of questions related to the disaster relief loan. So you'll see here question number 4 from the application for the Paycheck Protection Program is asking if you've received an economic injury disaster loan between January 31st and April 3rd. If yes, provide details around that loan. There is language in the law, and now granted, there are some new guidelines that have superseded the law, but the way that I still read it is that if you have a disaster relief loan and you've applied for it specific, let's say to cover rent or utilities or mortgage interest, then you still are eligible for the PPP loan and Paycheck Protection Program loan forgiveness. If you applied for that economic injury disaster loan and included payroll as a reason for that, you may have issues qualifying for this program and earning forgiveness on the loan amount that you do spend. So I will tell you here that when you're describing the details surrounding your SBA economic injury disaster loan, be specific to the purposes for which you applied that loan. If you applied for it purely for rent, then make sure that you emphasize that it was only for rent. Do not leave this open to interpretation and just say operating expenses. Because if I'm a bank trying to approve you for this loan or for forgiveness, and you just said operating expenses, payroll is going to be included in there, you may run into complications with either getting this loan through the Paycheck Protection Program or the forgiveness. So again, be very clear. Do not leave vagaries around the description on Addendum B. So this goes to what we were talking about earlier. Are you presently subject to indictment, criminal information? If you mark yes, your loan won't be approved. Second question, if you were involved in a felony or misdemeanor involving a minor, you have some qualifiers here. Again, if you mark yes, you will run into issues with this loan application. And then lastly here, we had mentioned that your payroll costs could only include employees that were residents here in the United States. Applicants for this PPP program, you have to be a lawful permanent resident or a U.S. citizen. If you are not a U.S. citizen or a permanent resident, you can apply, but it will not be approved.
On the certifications, this answers the questions we had previously regarding the self-certified requirements for these loans. So what we're looking at is each applicant, being the owners that own 20% or more, need to initial and certify, one, that current economic conditions make this loan necessary to continue operations. Two, that the intent is to use the funds to retain workers, maintain payroll, and limit spending to the eligible expenses, those being mortgage payments, lease payments, rent, and utility payments. Secondly, there is a certification on the verification of full-time equivalent employees. There's also a note regarding that the owner anticipates that not more than 25% of the loan will be used for non-payroll cost, and that factors into the forgiven amount as well. It also certifies that the applicant has not and will not receive another loan under this program from February 15th through the end of this year. Specific to dealerships now.
So we know that we have plenty of dealership clients on this call. So as we mentioned, franchise dealers, you'll need to have your OEM as an SBA approved franchise. If you go on the website, that list is dramatically different today than it was even a week ago. We understand that many franchises have done their best to be on the approved list of SBA franchises, including Toyota and Lexus, for example. I understand there was a call earlier today with General Motors that had mentioned that they are doing their best to get on the approved list.
And again, that approval is really important if you have, on a combined basis with all your entities, more than 500 employees.
The floor plan interest is likely going to be excluded from allowable expenses under this program. Again, the initial bill or law now said that you could be reimbursed or forgiven for expenses related to interest for covered loans. That was loans, revolving credit facilities that were in place as of February 15th. The guidance that we are reading now says payroll costs, interest on mortgages, rent, and utilities. So this is something, again, you should confirm with your financial provider, your financial institution, your SBA lender, to make sure that this is consistent with their understanding as well. But the way that we read this now, which we understand is authoritative, is that floor plan interest is likely going to be excluded from your allowable expenses. We do have some questions here.
One is, does the cap apply only on the application to create the loan balance and not on the forgiveness side? It applies to both. The $100,000 cap applies to both the computation of average monthly payroll cost, just the compensation piece, as well as when computing the amount of compensation for loan forgiveness.
We do have a question regarding the limit on forgiveness related to headcount and salary reductions. I would ask that you reach out to us after this presentation. Each situation can be slightly different. I want to make sure that we get you the answer that is relevant to your situation.
A single member LLC with no employees. Our understanding is that is a self-employed application, which would be which would start on April 10th.
We have a question related to whether family members of an owner can be included in the payroll computation. So the famous accountant answer is it depends. It really depends on how those individuals are structured or compensated. If they're 1099s, as we've mentioned, 1099s are specifically carved out for the purposes of this program, and they are able to apply for this program on their own. If you have family members that are paid on a W-2 and that their compensation is, say, under $100,000, then it is very simple. They are treated as any other employee. If they have salary over $100,000, the cap that we've been discussing applies to them as well.
There's a question as to whether you can use pay based on the rolling 12 as opposed to 2019. Our understanding of the guideline is that it states most applicants will use 2019 data. Again, on that one, that would be a good question for your bank as to their preference. However, due to the simplicity of having the forms available, we believe that relying on 2019 may be the preference of all participating banks.
What does retirement benefits include? So this will be employer contributions to retirement, like let's say a 401k. If you have a severance program that you've paid to your employees, as we indicated, under payroll cost, dismissal of employees is included in that. We have a question whether each owner needs to initial the responses on the application, and I do believe that it does say that each owner needs to initial it. So if you have 20% owners of the equity of the entity, each individual will need to initial it. So you will have a total of 5 initials next to each response.
Or 5 applications for the same loan.
Is the unforgiven portion a 2-year loan at 0.5% interest? Yes. So whatever is left after the forgiveness, so let's just say you get a loan for $1.5 million. Unfortunately, only $500,000 of it is forgiven. That remaining $1 million balance will be due in 2 years, and the interest applicable to that loan will be 0.5% interest. We have a question about regarding calculating FTEs. So full-time equivalents, as it's defined by the Small Business Administration, a full-time equivalent is an employee that has more than 30 hours. So if you have an employee that has 40 hours, that counts as 1 full-time equivalent. If you have an employee that works 60 hours, that is 1 full-time equivalent. If you have 2 employees that both work 20 hours, which total to 40 hours, those 2 employees combine to be 1 full-time equivalent. I know that we have many other questions. To the extent that you have, that you are requesting assistance with compiling the application, questions about what is covered and what is not, please feel free to reach out to us at the contact information on the screen. We'd like to thank you for participating in today's webinar, and we look forward to being a resource to you in the future.
Thank you.
Thank you very much.